Alejandro Zambrano, and I'm the Global Chief Market Strategist with ATFX, and I'm also the editor and manager of investingcube.com. All right, let me see if we are live before we commence. There we go. Yes, it looks like we are live now. So guys, awesome. Good. All right, good. Guys, thank you so much. I hope you guys had a good weekend. I see Basa the second in the chat box. We have Stefan as well. Welcome, guys. If you guys want to join, there's a chat box to your right. Just put your name in there, say hello, and if you have questions, you can put that as well. All right, guys. So we're doing things a bit differently this time around. So we're gonna try a few new things going forward, and then we'll see what happens. If you don't like the new format, we'll revert to the old one. So what was the old format then? Old format was short updates Monday to Friday to keep you guys updated. What we're gonna do now is something a bit different. We're gonna do a longer one. So we're gonna spend about an hour or so taking a look at what happened with the macroeconomics of last week. And also what may happen this week, and then we're gonna take a look at all the major markets. So you're gonna take a look at stock indices, Aussie dollar, New Zealand dollar, all those coins that are currencies that I usually don't take a look at. It's gonna be currencies, commodities, indices, and cryptocurrencies. So we're gonna cover all of that, and of course with the macro. And then after that, the first hour, we're gonna take a bit of a break, and then we come back, and we're gonna take a look at some maybe 25 to 30 different UK and US shares that are really popular in the UK where we are based, or where I'm based. So that's also what we're going to be doing. If you have questions about the major indices and things like that, you can just put them in the chat box there, and then what we'll do when I finish the first part, I'll answer them, and then we'll take a look at the shares. Okay, good. So let's get going. So let me see here. Okay, good. All right, so we're going to start now. So if you guys are new to me, who am I? That's me here, and obviously on the chat here on the webcam. So my name is Alejandro Zambrano. You can call me Alex, and I am the manager and also founder of investingcube.com, which is the website where we produce market analysis to help traders stay on top of the markets and hopefully trade better and subsequently, make more money and lower risks. So we're here to support traders. I'm also ATFX Global Chief Market Strategist. So I manage analysts from different parts of the world and produce research and education for ATFX. And this broadcast is actually going out on the ATFX YouTube channel, so don't forget to subscribe to our videos. And before that, I was the Chief Market Strategist of a company called Amana Capital. And before that, I was the head analyst of FXCM's London research desk. So FXCM used to be one of the world's biggest currency traders, still there in the top 10, but not as big as they were when I was there. And I actually joined them in 2009 to 2016. And another big thing as well is I've been training since 2006, so I have quite a lot of experience. All right, so what's the main theme? What are people talking about this week? And what's the general mood? I think this chart here explains exactly what the mood is like. So what you're looking at is the Nasdaq 100, and you can see here on this weekly chart how the price was going up and up and up and up and up. After quite a boring 2018, 2019, we're going up and up and up. I think we're up with some 10% or something like that before the market collapsed on the back of the coronavirus. But last week, the Nasdaq 100 reclaimed the 2020 high, and it's been an amazing year so far. The market declined with 32%. So if you were a bear, you had the opportunity to make money. And then from the very low to the very high, the market gained by 48.99%. So if you were bullish, you had the opportunity to make money. I was bearish from a technical point of view, but ultimately I thought we were going to go higher in the Nasdaq and many other markets. And that's where we are now. But what's also interesting is that, will we be able to repeat what we saw last week with the non-farm payrolls on Friday? I mean, the numbers were much better than anticipated. Will that be able to be repeated? Isn't most of the gains priced in? What if we have a second wave? Those are the questions that cross my mind, and that makes me less interested to buy at these highs as I was when we're down below. So we're going to talk a bit about that. So just to provide you again with a little bit of an overview, gonna do the macroeconomic update. Takes about 20 minutes, and week ahead, and then we'll spend some half an hour or so taking a look at the major indices and cryptos and currencies and gold and crude. Then we'll take a break. Then we'll take a look at UK and US shares. But before we do any of that, I need to show you guys the risk disclaimer. Why? Well, because if you go to some brokers, you know, if you go on YouTube, they're gonna tell you it's super easy to make a lot of money and you can do that very quickly. It's not true. All right, guys, so let's burst that bubble. And let's read out the first statement here, and which is, CFDs are complex instruments with come of a high risk of losing money rapidly to leverage. That's true. I mean, stock markets decline as you saw before, with some Nasdaq 100 decline with 32%. If you traded that with 2 times leverage, you would have lost 62%. What more, if you trade with 2 times leverage and you bought at the bottom, you would have made 100% of your money. Well, most people don't trade with 2 times leverage. They trade with higher amounts of leverage. And that is why 67.07% of retail investors lose money when trading CFDs and spread betting with ATFX. So you need to fully understand that. You need to understand if this is something you want to be doing before opening a real account. As well, I'm going to share with you guys my view on the market, and I've been trading for quite some time, so I know quite a bit, and I'm doing okay on my account. Doesn't necessarily mean that you're going to be doing okay on your account, and I'm doing this with an educational purpose. So this is not buy or sell recommendations, it's just my market opinion. And I'm not a licensed investment advisor by any means. In fact, you don't even have to be licensed to give your opinion about something. So that's why as well why I haven't bothered to do that. Okay, so let's begin. Let's begin with the deep end then. And let's talk about the macroeconomic data. Why is everybody so excited? Well, this is a good one. Caxin Services PMI. This is the service sector PMI from China. And that one actually rose to the same levels as we've seen on the highest level since October 2010. The index moved all the way up to 55. Now that index, when they shut down China, it went down to 26.5. I remember when we saw this drop, everybody was like, what just happened? Was it even possible to go that low? In Europe, similar indicators went down to 13. And as an indicator, it goes from 0 to 100. So you can understand the shock, and it explains why the market collapsed so much fast as it did. But now, because as I said before, it's an artificial shutdown. We would have had a shutdown anyway. You know, people complain that, oh, my government is shutting things down, I can't go to work. Okay, but what happened 102 years ago when you had the Spanish flu? People self-isolated by themselves. The government didn't necessarily have to tell them. People started to self-isolate. It's just that they did self-isolation when it was too late, when too many people had died. Back 102 years ago as well, the access to information was very different, and the government was literally telling everybody that don't worry about it, that you're gonna be fine. So that's why as well we had some 40 million dead people across the world. Long story short, though, what this tells us is that the Chinese economy and the service sector is bouncing back. And why do I care about the service sector, not the manufacturing sector? Because the manufacturing sector did not decline as much. So this what it's telling you is that things are going good, resuming good in China. In the US, we had a similar index, the ISM non-manufacturing PMI, that rose from to 45.4 versus 41.5 expected, 41.8, which is again better than expected. And you can see how the market or the index went up from 41.8 in May. Now we're moving up a bit. We're still not where we were, but we're going in the right direction. What else? This was the big shocker in regards to the labor market. So this is the ADP employment change. If you don't know, ADP is a company, and one of its big selling products is payrolls reporting systems. In fact, one of the big brokers I used to work with used to have ADP. So what happens is that when you join the company, the HR system would use the ADP payroll system. So the ADP payroll system is so spread across the world that they have in the US, that they have a quite good clue on how many users are being created in their systems. And from there, they can create some sort of an indicator of what the labor market is doing. Now, this is interesting. So in April, the US economy lost 19.5 million jobs. So people said, all right, so we lost 19.5. Maybe we will lose a cool 9 million At least that's what initial jobless are telling us. Initial jobless claims is the weekly indicator, and that weekly indicator was suggesting, well, only shows the losses. It doesn't show job creation. So when the job losses amounted to 2.7 million instead of 9 million, that was a big surprise to people. That as well boosted the mood in the market. What else then? No from payrolls was out on Friday. Now this is the big shocker. Now I have been shocked before, but just I think it's the last time I saw something like this. I had to sort of rub my eyes to make sure I was seeing things correctly, and then I went and checked a few other websites just to make sure that I was looking at the right data. But yeah, the US economy lost 20.6 million jobs in April. Yet in May, it generated 2.5 million. Well, 2. Actually, yeah, this should actually say 2.5, so it makes sense. So 2.5 million jobs were created. Now that's a big boost. Now, of course, the government agency that run this, you know, they don't have the same amount of staff as before. They're not doing face-to-face meetings as they used to do. They're not calling people as they used to do. So there's data errors here, no question about this. And a lot of people said, "Oh, this is a fake report. President Trump edited the numbers or something like that. He massaged the numbers, make it look better." Well, if you take a look what happened in Canada, which is a different country, and I'm very confident to say that they're probably not working with President Trump on massaging their numbers. You can see here how in Canada as well, they went from almost 2 million losses in April to generate 286,000 new jobs in May. And here the market anticipated a decline of 500,000. Instead, you're seeing growth. So what's happening in the US? What's happening in the US is some people that were working in these bars and hotels and similar establishments, restaurants, they got rehired, which makes perfect sense. In some places, they are reopening. And there is some data from OpenTable, which is an app where you can book tables. It's clearly showing how the number of bookings are increasing. And I think in places like Germany, the usage of the app is very similar to the same levels we saw last year. So yes, life is coming back to normal, and that's why stock markets are going up. The problem with this though, if you're gonna just be buying when stock markets are fully priced in the good news, then you're doing it wrongly. The general idea is buy at the sounds of cannons and sell at the sound of trumpets. What does that mean? Well, you buy when there's war, you buy when there's problems, and then you sell when they come out with a little trumpet and say, "Victory, we made it." That's when it's time to sell. That's an old expression coined by, I think it was Nathan Rothschild, some 200 years ago, something like that. And that shows you the reality of investing. You invest when things are bad, and then you get out when things are good. So that's why I'm a bit cautious. Now, that's one part of the thing. People are not fully back at work. I'm still at my London home, and I did start to use the tube, but not going far. I just going one station. People are still not consuming as before. So you might ask, why? Why are people like getting so excited? You know, this is a good chart. This is a good chart produced by Danske Bank. Yes, it's more than a week old, but it doesn't really matter too much. This is US debt held by the public over GDP. So you can see here, this is in 2008, where you had the last crisis, where US GDP, debt to GDP was around, so maybe some 35% or something, rose sharply, and then it continued to rise, and then it stabilized because you had good times. But you can see here how debt towards GDP has risen by some cool 75% up to 90%. So the government has pushed vast amounts of money to the US economy. And look at this one then. So this is the Federal Reserve balance sheet. So this is on the last crisis, where we had about $1 trillion or so in debt, and then we went up and up and up and up. Sorry, the balance sheet was $1 trillion, started to buy a lot of bonds. They did QE1, I think QE2, QE3. But you can see here the jump from here to here is the last QE, and that QE is anticipated to reach $8 trillion at one point. So they effectively, for now at least, added 75%. So the balance sheet of the Fed has increased with 75%. What's also interesting here is that if you look at the speed and magnitude of things, you can see how since March 11, you can see how this QE is much faster the money they're pumping in compared with all the other QEs. So you have the world improving, you have governments pushing a lot of money into the system. What else then? German central bank or German government, they issued a new stimulus package of 330 billion last week. That's 3.8% of GDP. This comes on top of the 750 billion they imposed, or they launched in March. So it's not just the Americans. Europeans as well are pushing some serious money into the system. As well in the UK, they have, I think, the amount of stimulus and support is as well amounting some 10% of GDP. What else? ECB increased its pandemic emergency purchase program by 60 billion. That was 100 billion more than what the market anticipated. Bank of England is meeting on June next week, and it's anticipated they're going to expand their asset purchases again. So more to come. And also, I don't have it here, but the Chinese governments and central bank is also looking to support their economy further. So more stimulus, it's on its way. And we already have a crazy amount of stimulus already. But not everything was good last week. And US-China tensions are increasing again. So Trump said he would remove policy agreements with Hong Kong, including an extradition treaty, commercial relations, and export controls. This could become something that people will focus on more and more at one point. But for now, people are not really paying attention to it. In regards to COVID-19, you have some amazing charts here by the Financial Times. You can find them free, actually, these ones. So these are excess deaths. The gray line is the average of the last 5 years. And then you have the individual years. And you can see how excess deaths in the US are coming down. Overall, 71.7 million people have died in the US, which is more than the normal, which is an increase of 26%. In the UK, you might look at the US and say, "Oh, the US is in serious trouble," but the US is such a bigger country than the UK. Here are UK numbers, and excess deaths are 65% higher than average, and 59.5%, 59,500 people died. Here's where we're going down, but then again we're moving upward slowly. Spain. In Italy, but Spain was one of the hardest hit, has fully regressed back to what's normal. 43,500 people excess deaths. And then you have Sweden, which has, just as an example here, they have very relaxed rules. And they have excess deaths amounting to 30% more than what's normal. Now, the question is now what's going to happen next? So, we had all these big protests in the US and in the UK and Germany, many different places. Hopefully, we don't see a rise in the number of COVID-19 cases. We'll just need to pay attention and look at the data over the next 2 weeks and see how that played out. If we have more people catching the disease because people were standing so close to each other. Hopefully, that's not going to be the case, but that's something we need to pay attention to. Now, you have new COVID cases across the world are unfortunately increasing. You have places like Brazil where they have some very high numbers, and it's so high and embarrassing for the president of Brazil that he decided to remove some of the data from his website. So from the government websites now, they're not looking at the total amount of deaths. They're just going to update and provide what's happening now, which is obviously important and is really important, but for comparison, the data is just embarrassing him, I guess. So he thinks that there's no point looking at the accumulated numbers. I think there is a point of looking at accumulated numbers because it gives you a bit of an indication if you're doing something good or not. And people started to change that. But here's another little chart. It's from last week. And this is from Danske Bank. And there are different phases, the way they categorize the data. So you have the exponential rise where number of cases rise exponentially, so out of control. And then you have the linear phase where we start to see that flattening. So the number of cases don't increase as fast anymore. And then you have when the spread slows and you see a contraction in the spread. So according to them, India and Brazil are on their way up, but they do think it's going to kick in. Why do they think so? Well, because you have measurements in places like Brazil as well, and there are different indices that shows that things are being tightened up in some places in Brazil. And if the government doesn't step in, people are gonna step in themselves. You know, when you have an uncle that dies or your grandmother, then you know you're gonna take more precaution yourself, right? And the problem, though, in many places in Latin America is that you have a big population. They don't have there's very limited support. It's not like Europe where you get 60 or 80% of your salary as they do here in the UK. A lot of people in these places, they only work, they go out and they work for the day. So they get some money every day. And they get paid every day. So it's not that they have a fixed income. So for example, Chile, you had big riots because the government was telling everybody to stay in, but these people, they're poor and they can't support themselves. And then the government was supposed to give them food and stuff, but they were not. And then you have riots, and then you have more people getting sick, and then you have this vicious circle. Okay, so what else? OPEC deal. Crude oil prices are up a bit here as well today. Why? Because the OPEC Plus deal was confirmed over the weekend. So OPEC and Russia. So you get OPEC plus Russia, OPEC plus. They agreed to extend their supply cuts until July. So you guys might remember, because we talked about this in April, and what happened here is that in April, OPEC plus agreed to cut production by 9.7 million barrels, but they only agreed to do this for May and June. From July, these cuts were supposed to be reduced from 9.7 to 7.7. And then in January next year, I think they were going to be totally removed. So what happened here is that when this deal was announced initially, crude oil prices declined because people said, well, it's not enough. Why did OPEC even do something like this? Because OPEC themselves believed that things would improve, otherwise they would not have done this. They were right. The situation did improve. Crude oil prices did go up. The world economy is improving, but the markets did not buy it the first time around. And now what they did is they said, we're not going to increase production and just reduce by 7.7%. We're going to extend this until the end of the month. And so for the rest of July, they're still going to have a production cut of 9.7 million barrels, which is the equivalent of a 10% of global supply. You can see here, this is from the Financial Times. You can see how world consumption, this is from the Energy and Information Administration. You can see how world consumption totally collapsed. And this is the million barrels per day. So around about 110 or so, 102 barrels per day consumption. Sharp decline. And according to these numbers, we're moving back up again here now. And later in this year, it's forecasted at least that world consumption is going to exceed crude oil prices. But you had that big gap here, and that's why you had that big slide. This is quite interesting. EIA crude oil stocks change. So you can see here in April how, at least in the US and Cushing, Oklahoma, you can see how the amount of crude oil inventories rose sharply. But since May or so, we actually started to get reduction in crude oil inventories. So what's ahead then? On Tuesday, we have, to summarize it, is there anything important this week? No. What are people going to talk about? Well, people are going to talk about the Fed. People are going to talk about UK GDP. Those are the two only things that people, you'll probably see about this on the headlines and things like that. Otherwise, what you're looking at here, you do have some stuff, of course. You got this, which is like an indicator for small companies in the US. This out on Tuesday. You have inflation readings. This could eventually influence the Federal Reserve, but inflation takes the backseat. So in a situation like this, inflation takes the backseat because people are more concerned about the job losses and job creation. So even if inflation is really high or very low, it still takes the backseat, but we're still going to watch those inflation numbers. And then you have jobless claims. So sorry, the Fed rate meeting. Fed is not anticipated to do anything. They've done so much for the economy right now. The question is, are they going to cut interest rates negative? I don't think they're going to do so, but people are still interested. They want to know. So that's what people are going to be watching as well. Then Thursday jobless claims, that is important. But now with this number, it's being so bad at predicting what happened with the labor market, people will pay less attention to them. And then for the UK, so as you know, they released monthly GDP numbers now. So GDP is anticipated to drop by 18.17% in April, which is less than, more, sorry, than the 5.8 that we saw in the prior month. And then you got Michigan consumer confidence. None of that really matters too much, but we have it on the list there. Other stuff, in the UK, new quarantine rules start from today. If you come to the country, you need to self-isolate or you can face a fine of £1,000. New York will enter its first of 4 reopening phases. So this is good. So New York's starting to come back online. That's interesting. Long story short, some 400,000 people are going to be able to come back to work. In England, dentists are going to open up. In Belgium, restaurants and bars will reopen. Just need to make sure that they have social distancing rules. Spain as well, they're gonna start to unlock more, and this one, sure, many of you guys are looking forward to it. But La Liga, the football league in Spain, will resume on Thursday. So that's a little bit on that. All right, let's take a look now at the markets, and we're going to begin with taking a look at the currencies, and then we're going to take a look at pound, dollar, yen, Aussie dollar, New Zealand dollar, dollar CAD, dollar Swissy, gold, crude, German DAX, Dow Jones, Nasdaq 100, and then we'll take a look at a few cryptos. Okay, good. All right, so what are we looking at here? So big picture, let's begin with big picture. This is your euro versus the USD. This is your weekly chart. So you might remember a few weeks ago, 2 weeks ago to be exact, I said we'll take out this high, we're gonna gain, and we gained by 373 pips, far more than I thought we were gonna gain. Looking at this from a big picture perspective, and you can read more about it in the Q3 report, which I will publish maybe by end of this week, if not early next week. I think we're going to go back to the middle, 110. I don't see why this market should be trading at 117, 119. There's nothing that gives the European EU that edge. I'm not super bearish where I think we're going to go down to 106 anymore, but I think we are going to come down. So in the short term then, I mean, personally, I think it started to reverse. But if we follow the short-term technical analysis, which is important, I always put the technical analysis ahead of my opinion about the markets, and I definitely put it ahead of the any macro stuff. Well, that tells you that you're looking at still an uptrend, a trend that is bullish above 111.82, and we're going deeper into the buy spot now, and we might go a little bit deeper today. But ultimately, I think we're going to swing upwards again, because normally you get yourself a double top or you get yourself some other indication. It doesn't just go straight up, straight down. It doesn't work like that. In the romantic world of Elliott wave theorists, the market goes straight up and then it goes straight down in some beautiful lines. No, it doesn't. It will be messy. Of course, the situation might have changed this time around. Why? Well, because you had that very good non-farm payrolls report. I wouldn't be selling dollars on the back of that report. And we're going down now, which I think makes perfect sense. Now, let's see what happens. The trend is bullish for now. It can go upwards. Here's your GBP versus the USD. And the GBP versus the USD on the daily also took out some very interesting levels. So if we look at this. You got yourself the April high, and then you got yourself the April 30th, 13th, 14th, and then you have April 30th. We took out that high, took out that double top. Took out a double top, we go higher. I was a bit cautious, but we got ourselves a bullish breakout. Now, if we look at this today, you're looking at a pullback, and the trend will for now remain bullish above 124.93. What I would have preferred though is a break to 127.33, but we're having that pullback. Might potentially get involved here. If we take out the low, and then we're going to go down to maybe 123.59, and if we're trading in the middle of this range in 2 weeks time, it would not surprise me a bit. But again, for now, the trend is bullish about 124.93. Dollar versus the Japanese yen. This one we talked about. We said buy here, trade it up here, book some of profits, and then see what happens with the non-farm payrolls. So the market reached the first target, and now we're going a bit higher. If we go down to 108.12, I think people are going to be buying again. I will be bullish as long as trade about 108.42, and I think we can still reach that target. You might ask, how did Alex derive that target? That's quite straightforward. You got yourself a head, left, and a right shoulder. What else? Aussie dollar versus the USD. This one I had some serious success with this one. Well, we've been bullish for most of this part here, and last very good idea was to buy here for this to go up, and that went spot on. Now, much like the Nasdaq 100 is back at its 2020 high, and you have so many days of bullish price action here, but you can see how the candles really struggle. These candles tell you that this indecision, some people are definitely selling. And for now, at least though, the way I operate is that I go with the trend until proven otherwise. So I'm bullish above 68, or the system is bullish above 68.48. And this one, because I'm quite bullish on stocks, I mean, if we go up, it would not surprise me. I'd rather buy this one than the EURUSD or the GBPUSD. Here's the New Zealand dollar versus the Japanese, New Zealand dollar versus the USD, where as well we have a very, very strong uptrend. And I'm going to push this down a bit, but I'm bullish from 64.45. And if we go down, I think we can go up. You have yourself dollar CAD, which I had very good success with. And here, the idea was to sell on the break here for this to go down. So we reached the first target, and then we reached the second target as well. For now, the trend is bearish, and it will continue to be bearish as long as you trade below 35.43. Remember that the Canadian numbers as well were good, and you saw some strength of the Canadian dollar versus many different pairs on Friday. I personally think though that this is a little bit too aggressively bearish. I think people will start to book profits here relatively soon, and I think that we might go up a bit, but for now remain bearish below 35.43. I think ultimately it will try to bottom out here, and I think it's going to swing up, but for now, for the next few days, I'm bearish below 135.43. Here's dollar Swissy. I actually shorted dollar Swissy myself. I shorted dollar Swissy here a few days ago around 96.13 or so. And then I was up a bit, and I was keeping this one because I thought that, you know, independently of the non-farm payrolls, we needed to go down. But I was wrong. The non-farm payrolls was stellar. The whole thing moved up. And I had my stop loss on the other side of this thing here. But then I said to myself, I'm not going to allow that to happen. So when I went back, when it went against me, I was able to close out the position for a small loss. Here are gold prices. Last week we said people are probably going to be buying here around, 1680 or so. If you put something like the monthly pivot point, this is the S2 level. So this is a good little spot to get involved. You have a trend being bullish or sideways at least from 1654, and we're developing into a rectangle pattern, and this is a very exciting opportunity. And the reasons are the following. We're within that range, and because we're within that range, if we have a break to the upside, we can go all the way up here. That's a $100 move. But if we bottom out here, go up and then break out, then you're looking at a potential move of $186 per contract. That is an 11% move, which I find super interesting. So it's interesting. The problem with this thing though is because it is trading sideways, and it has been trading sideways since mid April, nothing says that we can't trade sideways for the entirety of June. So bullish, but also because this is a rectangle, it's possible as well to sell. It's possible just to do something like this, okay? Like that. So keep your eyes peeled and be very open-minded here, because we might trade substantially lower or substantially higher. Here are crude oil prices. Crude oil prices are bullish, no doubt about that. And the last very good setup was buy here from 36 for this to go up. It did far better than I thought it would do. I have two scenarios for you. I don't know which one is going to play out. If the market continues to trade very sort of sluggish, up and up and up, especially what we've seen in stock markets, then this means that we can't wait for a steep pullback. My steep pullback scenario says buy it back here at 34.4. Why? Because you have touching your monthly R1. We went up quite aggressively from the lows. The market is up with some 30%. And this is a July contract. Now, if you don't want to miss out and you're super bullish, then you look just for a little pullback to 37.98. You may ask yourself, but Alex, you just said that OPEC introduced this new deal. Yes. But remember, with financial markets, it's not so much about what just happened. It's more if that was expected or not. And people were anticipating a deal like the OPEC deal. And they just got it confirmed on Friday. That's it. If they would not have confirmed it, if they would have said, we're not going to extend the cuts, then we would have been in trouble and crude oil prices would have slid. But now, because they did what they did and people know about it, then that's why we're high. In the longer run, it's going to have a positive impact. But in the short run, it will, as you can see here, have very limited impact. Non-farm payrolls, though, on Friday had a significant impact on stock markets. Why? Because that was not anticipated. And if we take a look at the Dow Jones, you can see how the market rose sharply. You might remember I said to you guys, look to buy here for this to go up. It did go up. I traded from here to here, and then from here to here. And I missed out on the last part. I didn't think we were going to go much higher, but we did. And this market now is so bullish. And as you know me, I've been looking for pullbacks, but I'm not getting that opportunity. And we might not get an opportunity here. I hope we will. So I took fib from this low, from the June 4th low to the current high, and I'm looking for a bit of a pullback. From a short-term perspective, you are in a mini range here, and you might even take out this high, and then we're gonna go substantially higher. I mean, well, not substantially, but the difference in the range is 1% or 298 points. So you might get that, but I don't trade that short term anymore. I used to do that. It didn't work out for me. So I'm still looking for that pullback. Ultimately, like the monthly pivot point is up here, the R2. You have the lows. If we have a little pullback, I would love to buy and then target these highs again. This is the Nasdaq 100, where you had that 2020 high. We took out the high. If you look at this from a 4-hour perspective, then the trend is bullish above 98.08, which is here. And we had a nice little breakout. And what I liked about this one is actually spent some time trading sideways. So I wouldn't mind buying a bit, maybe on a pullback. So if we go down to 97.29, that will be okay. And maybe this is the beginning. Maybe this is the beginning of this market starting to trade upwards. You had seen a significant pickup: Spanish stock market, Italian stock market, the FTSE 100, Netherlands stock market, Swiss stock market, all these markets that did not trade as aggressively higher like the US stock markets have now started to catch up. That was that was something that was available. Now that gap has narrowed down. Nasdaq 100, because it was already so high to begin with, it didn't rally. But eventually what's happened is that the gap between the Nasdaq and everything else narrows down. And then suddenly people start to become interested to buy the Nasdaq 100. And maybe this was it. If it isn't, and we trade above 9,508, now this is going to be a proper failed breakout. Trade to new all-time high, and then you got a proper reversal. And you know what's going to happen at that point? the bears, they got stopped out last week, so they're not happy at all because they think the world was going to collapse. They didn't. And then when we go down here, bulls like myself, trend followers, are going to be stopped out. And then we're going to be pissed off. Everybody is upset. And that is when these people that bought here are going to start to say, oh, wow, we're probably going to reverse. And we try to go down and down and down. And those are the main markets. Let's see if you guys have, actually, before I forget, let's take a look at cryptos. So this is Bitcoin. And Bitcoin is a bit of a mess. So let me just clean up this. So Bitcoin on a weekly, we're within this mega, this is an unlocked chart. So you're within this mega triangle. That mega triangle has a target of 22,895, okay? And you have this high, which is important. And I already said last week that we can potentially buy a little bit on the break to 10,015. So we're pretty much around these levels, but we did slide quite aggressively before we actually stabilized. And then we are still below this level, and we did not get that follow through. I thought we were going to go up and then break up higher, but we didn't. Instead, we just went up, and then we did not take out this level. So this is the level I am personally watching. I got a little alarm bell on it. And if we do take out 10,522, then we can go substantially higher. What's really interesting, though, is that if that high goes, then you can check out some of the other crypto coins because they're going to probably trade even higher from a percentage basis. So this is just the cue to start to take a look at the smaller coins, because you can buy a coin here. It's going to cost you 10,000. Now, if that on 10,500, even if that goes double, 21,000, that's 100%. It's going to be difficult for this one to reach 21%, $21,000 per coin. However, though, if that one goes up 100%, then you see some of the smaller coins that cost 250 go up with, I don't know, 200%, 300%. And then you have some very, very small coins that cost nothing that might do also some crazy stuff. So this is just a cue for me to get involved in other coins. All right, let's see if you guys have any questions. So we have Baza the second. Hi, Alex, Stefan. That dollar CAD, I'm short. I still think I'm still in. I closed half at 134. I still think that's going down because the Fed is actively devaluing the dollar behind the scenes. Otherwise, dollar CAD would be at 150 already. Yeah, maybe. The thing is this, though, how much more can they do? I don't think they're actively devaluating their currency, by the way. I think they are rather just trying to help their economy. That's it. The dollar, you see the US economy, they produce a lot of stuff within the country. It's a service. It's a service economy. I think 60 or 70% of their economy comes from services. So what happens is that they don't really care too much about the dollar, because that doesn't matter for an American. It doesn't matter if the dollar is up or down, because he's going to use services from American companies. There's some stuff, of course, like washing machines, I guess. But, they produce cars, they produce a lot of stuff on their own, so they don't have to. In the past, though, when they had to import a lot of oil, it became an issue. But now they have so much oil that they don't need it. So the dollar is nothing I think they're actively dealing with. But this is interesting. This is dollar Mexican peso. So the dollar Mexican peso, on the back of the crisis, it was trading at $18.45, 18.45 Mexican pesos versus the dollar, and rose to 25. So it lost 39% of its value. And since then, it has recuperated some of its losses. If you look at dollar South African rand, it's the same situation here, where the dollar, the South African rand, lost a cool 38%, and it's now recuperating some of its losses. And what's interesting here, I think, is that when you had this panic, everybody just wanted to get hold of dollars at that point. Everybody. So what the central bank of the US did is that it initiated swap deals with some major central banks. So every Wednesday there will be a deal. So say this central bank of Sweden would say, all right, you know what? I need $100 million, $100 million. And then they would get this money directly from the US central bank. And then they would lend this out to the big corporations. They changed that. So now it's not just bigger central banks, it's far more central banks. The second thing they did is that before, if I remember correctly, they would only engage in these swap rates every Wednesday. So what would happen is that these central banks would get some dollars in, and then you start to see some stress again in the market, and then you had to wait until Wednesday to be rescued. Now every day they do these deals, and that limited the slide in dollar, the gain in the dollar. Otherwise, this would have gone maybe 60% up or something like that, and that limited things. But I think what's happening now is that people are buying in countries, assets in countries like Mexico and South Africa and places like that, where they see value. So now you're seeing the flow going the other way around. Good morning, Maurizio. Hope you're doing good. Okay, good, guys. So we're gonna take a 8-minute break, and then we're gonna come back and we're gonna continue, and we're gonna take a look at some UK stocks, and we're gonna take a look at quite a few of them. So we're gonna take a look at let's see if I can show you. Lloyd's, Apple, Tesla, BT, Tesco, BP, Amazon, Barclays, RBS, RMG, Vodafone, and Centrica, a bunch of companies that I rarely look at myself, some of these ones, but they're super popular, and we're going to some of them I don't look at, by the way, not all of them. And we're going to take a look at them and see if there's anything interesting happening here. Like Cineworld, for example, is up with a nice cool 6.6% today. And Carnival, which is the cruise company, is up with a nice cool 12.5% today. And then you have, for example, this one over here, Tullow Oil, which is up with a cool 28% today. So we have a few stocks that we're going to take a look at, and we'll do that in about 8 minutes time. See if I can find. Okay, guys, so we're gonna leave this on here, and I'll see you guys in about 8 minutes time. Okay, guys, and we're back. Thanks so much for still sticking with me. I can see some of you guys are still here. Different format, as you know, and we're gonna take a look at some stocks now, see if there's any good opportunities there. It also helps to understand really what's driving our indices, right? Like, we always take a look at the S&P 500 or the Nasdaq 100 or the DAX and the FTSE, but we don't necessarily know what's actually driving it. And something we're going to do now, actually, which you didn't do before, which you should have done, is actually take a look at the FTSE 100. So let's begin by taking a look at the FTSE 100. And then we're going to take a look at all the details. So this is the FTSE 100, which as well experienced some significant slides from its very high. It declined with a solid, cool 37%. And from its very low, is up with a cool 35%. So this is your very short-term outlook, and we have something. It's not like a perfect rectangle. I mean, some people probably gonna tell me off and say, no, it's not. Well, what is it then? Well, it was a descending triangle, which actually didn't sell on the back of the. It didn't have a traditional breakdown. It had a breakdown on the other way, and then you have that. And from this perspective, we are not far away from that target. And the thing is this, though, surely UK companies will recuperate. I think so. I see no reason why they shouldn't. And if you're looking at this right now and someone says, well, Alex, you have to put a position on. Well, I'm going to say, okay, if I have to put a position on, let's wait for a little pullback. I may be totally wrong, but there's no new fresh pattern here that tells me to go along. So let's look at something like this. The second thing as well is that this market might be where it's at. It doesn't mean, though, that we can't have breakouts in actual indices, in the actual shares. And that is why I think it's important to take a look at the shares as well. So that's what we're going to do today. In this weekly update, we are going to take a look at all the other markets and see all the other shares here and see if anything interesting is happening. And some of the shares we're going to take a look at in this order: Lloyd's, Apple, Tesla, BT, TSCO, and then we're going to take a look at AMZN and Barclays and see how much far we can go. All right, so I already prepared some slides here. Now, also full disclosure, I'm not the fully macroeconomic or microeconomic type of guy that would go and read up on all the individual companies. So you need to do your own homework. I'm going to provide you guys with a technical analysis, but I don't know if some of these companies have some other underlying issues that could make my analysis just go, become nonsense and not really work out at all. So you need to pay attention to that, especially if some companies are anticipated to get bailouts and things like that, or there's corruption within the company and suddenly they cook their books or something like that. That's something I assume you guys have a good overview of. All right, so this is Lloyd's Banking. So Lloyd's Banking is going up. This is good to some extent. Will it improve, though? That's the question, though. So you had a descending triangle, which was indicating a slide, and trading all the way down to the May 2012 low. But what's interesting is that last week you had some of the members from the Bank of England saying that they are investigating in introducing negative interest rates, but that if you look at what happened in Japan and the EU, it's not good for the banks, which is true. When you have negative interest rates, the bread and butter, the way these banks make their money is gone. And I think that was really positive. However, though, you need to be super vigilant for the June meeting. So in 10 days, if Andrew Bailey, which is the head of the government now, or the head of the bank, central bank, goes out and says, oh, look, guys, we're going to introduce negative interest rates. So that could happen. That can have a directly negative impact on Lloyd's, just because they're a bank and it's going to be difficult for them to operate under negative yields. Now, if you look at it from a bigger picture perspective, we are at very low levels, right? We're pretty much the same levels as we were in 2018. And yeah, maybe we'll have some hard Brexit. Maybe that's going to, influence things. But for now, I mean, from a purely technical perspective, we declined quite a bit. And you have a bullish breakout here. There's no question about that. So you have the break here. That pattern itself tells you can go up to 40.09. Realistically, I think we can go up higher, maybe to $44.89 pounds, or 44.9, sorry, pence. Okay, so that's where I think we can go. So looking at this today, then where should we be buying then? Well, if you're lucky, we might come back down to the April 30th high, and then that level is the 34.84 level. Maybe from that level it might go a bit deeper, but as long as we trade above this level here, which is 29.85, then that short-term trend is going to be bullish for traders. If you're the invested type of guy, you know, as long as you trade about 27.49, it doesn't really matter too much. If you start to trade below this, and especially trade below 24.74, then it's time to run for the hills. But for short-term traders, you know, if we have a bit of pullback and then upwards, I think that makes sense. Again, longer-term investors, as long as you don't take out these levels, I wouldn't worry. Here's Apple. Apple looks exactly like the Nasdaq 100, right? So had an amazing slide of some cool 35%, and now you have a very strong rise. Why? Because people are still buying these iPhones and other products that they sell, and they're still gonna be buying them. I can't see nobody really beating Apple right now in their game. Now you have a breakup from a purely technical perspective. You know, that's people getting stopped out, and I think here from, well, let's use the daily chart actually. I think from here, as long as you're above the May 18th high, low, this is a bullish trend. And if we just take some Fibonacci, I'm gonna take Fibonacci from the whole section like that. So you have the first level there. Actually, I'm sorry about that. I'm gonna use, no, we're gonna stick with that level. If we have that pullback, so if we go back to something like $321 per contract or per share, then that will be bullish. On a monthly perspective, the pivot point indicator tells us that we can go as high as 34.47. Let me just check something here, by the way. Sorry about this. Good. From a yearly perspective, you still could go much higher. You could technically go all the way up to $395 according to the yearly pivot point indicator. Let's take a look at Tesla. So this is Tesla, and people got super excited about Tesla because some people are claiming that we triggered an inverse head and shoulders. Not sure about that, but we had that move here, and some people are saying, all right, Tesla took out that trend line, now you can go to 1,400, 1,405. There's no doubt though that in the very short term we are dealing with an uptrend. You had a little push here, trading a bit sideways right now, but if you look at something like the daily chart, you know, you had a little push. Maybe we're gonna close the gap, maybe we're not. I think though, if we do have a bit of a pullback, so we try to close a bit of that gap in a bit more. So between 846 and 761, I think we're dealing with an uptrend like that. Take this out if it's also gonna work out. If you're like a very, very short-term trader, then you probably already know if we take out 910, then that as well is gonna cross this to go up a bit. Now here's BT. BT took out this high, which is from April 29. That's bullish. So we're up today 4%, and we can have a bit more of a short covering. So the market tries to go up and up and up. Maybe we trade to 136 at one point. The problem with BT, and I don't want to ruin anybody's mood, but it's been in a downtrend since December 2015, and it's only if you have some very strong conviction that you will be buying this thing. I know it's close to the lows, so yeah, if you are, you know, if you don't care, they're gonna be around, of course. So if you don't care and you want to keep them, maybe 2-3 years time we'll be here at 360. Because now in the very short term, there's nothing that suggests to me that we're gonna begin a multi-year rally, because we're still dealing with these downtrends. So we will probably go up a bit. I don't deny that. I don't say that. We can go up maybe to 160, but then probably gonna go down again. Probably spend some time here. before this market properly bottoms out. But in the really short term, the trend is short-term bullish above 113.25, and we may go down a little bit, but ultimately maybe go up to 132, maybe 136, but I wouldn't get too excited. Now here's TSCO. TSCO is super popular. I don't know why, but it is super popular. And why am I surprised that it's super popular? Because it's not doing anything. It is doing some stuff, but it's not doing everything. It's not moving too much. It is starting to look much better though. This is a ascending triangle, and difference between this point and this point gives you a target of 323. So if we take out this level, we may go all the way up here. Now you might potentially, if you have a very strong view on TSCO, potentially look to get involved way before that, because what the technicals are telling us is that we're supported by this trend line. So if we go down to 214.9 to 215, then what it tells us that we should be bullish above this low, and I will be bullish above this low. If we take out this low on the other hand, then this pattern would have triggered the other direction. So it would probably generate a slide to 145. So suddenly, as you can see, this low here is really important, the 144 level. And it's interesting because it provides you that idea of getting involved here and then waiting for that breakout. If you're super long term, then that's fine, because then you can potentially have 50% return. But otherwise, as you can see, it's quite a slow moving stock. So for this to rise sharply to 326, I think they need to change something in their business model, which I don't really see right now what that could be, especially as you have companies like Hokkaido doing much more better and really dominating the next step, which is sort of delivery at home. And then, so, but this is an opportunity. Okay, so you got BP. BP, of course, in a good mood because of crude oil prices. So you had a descending triangle that broke the other way. This would have been an excellent opportunity to get involved at the time, because you had a break here, plus you had a break to horizontal levels. So this made a lot of sense to do something like this. Now we're almost at target, so fortunately it's not the time to get involved here. If anything, this can go up, and around 388, I think that's where people are going to start to book profits. If we have a bit of a pullback, I think people are going to buy, and then they're going to target the next level. But it's difficult for me to say right now, but I reckon if we would come down to 341 or something like that, this little spot here, I think people are going to be interested. And I think the trend is going to continue to be bullish below this level, above this level here, which is 302. This is Amazon, and Amazon is also very bullish. So Amazon was stuck in this big ascending triangle. So it hit a high here in September 2018, then it had a breakout which proved to be false, but ultimately it went up, and I'm obviously ignoring this section here, and you have this 607 target. Now this is the daily chart, and in the daily chart you have a short-term support down here. So you might be able to potentially get involved here if you're really bullish, and if you like to buy dips, and then we can potentially do something like this. The alternative is that this does not hold, and then we'll go all the way down to 2040, and then from here people try to rebuild long positions. Here's Barclays. Barclays as well. You know, this is a nice, very beautiful ascending triangle with not two highs at the same spot. You have that little breakout, you have that little pullback, a beautiful little pullback, and the market soared. So here, unfortunately, again, you're a bit too late unless you want to trade this in the very short term. That's not my cup of tea though, and I think it makes sense to look for a little bit of a pullback. But this one is on fire right now. I think it's gonna go up, and you know, you can always just look at the 1 hour. There's always opportunities in the 1 hour. You know, you have the break here, so maybe if we go down a bit, then upwards. But we're not doing the very short term here in this presentation. So what I would say, we can probably push this up a bit like that. I don't mind that, and we can tighten things up. So I'm going to be bullish about 106.96. Let's make that the trend defining level, and from this is a sweet spot here, but hopefully and then it doesn't actually challenge this, but this will be the sweet spot. If it indeed just goes down and goes up, then I can take the trend defining level, just put it here. RBS had a breakout on Friday, This is a nice, very, very nice, beautiful rectangle. You can't say nothing about this. It's a perfect rectangle. You had the break. The rectangle pattern itself suggests that we can go up to 151. Fibonacci tells us that we can go up to 160, if not 180. And if we have a pullback to the breakout point, then I think that will be very interesting to keep an eye on. So if we move back a bit, maybe too close to Friday's lows, but not all the way down, then that will be 130. From 130 all the way down to 110, I'm bullish, and I'm looking for the first target up here. This is Royal Mail. Royal Mail is also one of these things. It's something that a lot of retail investors got really hyped into buying. Still remember, like IG Markets, they were like traded on our platform before the, I think it was before the actual IPO, because they had access to it. And it's just been a failure since then. You know, the market is just trading sideways and then trading lower. So here, we're definitely correcting, but I don't know if I would be doing anything with this one, but we can't deny that there's a bit of a bullish uptrend of 155. Might go maybe to 200, 220, but around here, everybody that bought here from the summer of last year up until the beginning of this year, they will start to get out. So I would be very cautious here. Here's Vodafone. Vodafone from a weekly perspective is also, actually from a weekly perspective, is at the lows here. And here we're going upwards as well. People are really enthusiastic about this one, but we're heading straight into resistance. Might hit maybe 150, but this, as you can see, people sold here, so it makes a lot of sense to get out of that again. I don't really foresee this trade much higher. It might go up a bit and then probably down. So what's the level you can look at? Well, in the very short term, the trend is going to be bullish above 124, but this is, if anything, time to start to rein in the position, reduce the risks. This is Centrica. Centrica is also in a massive downtrend. A lot of the most popular stocks, all these stocks are super popular. You have 100,000 to 1 million people looking for these stocks in the UK. And I'm sorry to say, but some of them look like this. Centrica was a 400 and then went all the way down to 28. And the reason why it is like this is that people are they're holding them, or they're just betting on a total recovery here, which fortunately, guys, doesn't look like it's going to happen. Now, maybe what you're looking for is, you know, a sharp little gain to the upside. Maybe that's what makes you super excited. I mean, we are having inverse initials with the head, left and right shoulder. You have the break, and it does suggest we can go up to maybe 53.19. And let me see here, just take fib from the very high to the very low. That will be your first fib. And then you have your 50 fib at 61.79. And if you look at this from a 6-hour chart, you know, you have a little bit of a spike to the upside. So this just kick-started on Friday. That would be the best opportunity to buy. If you're lucky, we might come down a bit. And then maybe one could revisit this and turn bullish from something like 41.65. For now, the trend will remain bullish as long as trade above 33.91. This is Standard Life, and if you take a look at this from a weekly perspective, it's also in a downtrend. It's not really very encouraging, and much like I think it was Vodafone we just looked at, it's just rallying straight towards resistance. The short-term trend will remain bullish above 251. It might pull back a little bit, maybe to 270, 260, and then I think we can probably head upwards again. But this is, again, something I would not get carried away unless you're aware of some material change that's going to change the way these guys operate and the way these guys make money. If you think, all right, they actually done something terrific, and remember, I don't study all the individual companies and all the nitty-gritty, then what this chart is telling you is that it's going to go up, but it's going to be limited. But if you are following the nitty-gritty, you know that they replaced this thing, or they did a new product and so on, new service, so you think it's going to revolutionize their way of doing business, then yeah, forget about the technicals to some extent. But the technicals are telling you they're going to go up, but they're going to stall here. This is GlaxoSmithKline, and here you have something that is brewing. This is interesting because you have a nice little solid sideways pattern here, right? And overall, very sideways type of stock. But this is actually a neutral to some extent because you have the bullish view and then it's stalled. So what's quite interesting with this one is that you can deal with a breakout. So you can either look to get involved here, or that's what I think people are gonna do. I'm not saying you should. And then that one like that, okay? So this is very neutral. It's something to just keep an eye on now. Of course, if you're super bullish, then what you do around the lows, you get involved. What stops below? On the other hand, if you're super bearish, then these people are gonna sell here around the highs. They might even try to short sell if they can. This is Premier Oil. What a beautiful breakout, this one. This is literally on fire. This one had a breakout and a gap, really. So it gapped higher on 5th of June, and it's now just trading straight up. This one, we definitely missed this one. If it would come down, I'm not sure if it will come down, but if it does though that, we can probably potentially get involved. It really depends on what's happening at that point. But we're at the first fib. You have some really solid resistance here at the 50 fib at 64.64. So I think that's where I would be looking at for the next target beyond this little section here. All right, this is Greenland Gold PLC. It's also on fire. This one is on fire. This is your Bitcoin. Look at this thing. Very boring for a long period of time. This is, yeah, it was at 12 cents. And then here in December, it was at 1.62. And now it's up with 655%. So that's your Bitcoin of this year in the UK stock market. There's probably some other stuff I missed as well, but yeah. So you have this little pattern here, which was an ascending triangle, and I think we already reached this target for this thing, but let's see. Yes, we just reached a target. It's trying to break out higher today. It's not really succeeding yet. Take out the high and we can probably go upwards. Looking at the monthly pivot point, actually even on the monthly pivot point is telling us to not get involved. This is if you're if you know what you're doing, if you like to trade short term, if you like volatile stuff. If we take out 1248, then we can probably go a bit upwards, and you might even be able to argue that this is a mini pattern and that you can have this. So you can have a 15% rise here, but this is super risky. Might go a bit higher here. What I would have preferred is to look for the pullback, if we're lucky, all the way down to 9.98, and then from here look to potentially get involved. Trend defining level goes here, but we might even be able to pull it off with just doing like that. Remember, this is a 6-hour chart. If we look at it from a weekly perspective, I want to see, have we ever been here? No, we have not. So yeah, uncharted territory. All right, this is BA Systems. BA Systems daily chart. You know, we're trading sideways between 429 and 661.71. Then you have support at 481, and then you have some resistance here at 520. Then you have some other levels here. This little range here, this is a rectangle pattern, and it's been here from May 1st. So this is a solid little move. Been here for a bit more than a week, month, and it will it's telling us if we take out the high, we can probably do like that. Let's put a little alert here for ourselves. So we get that little email. Oh, I need to upgrade. I think I should be able to. No. Okay. Not going to do that today then. 522, that's the key. The alternative is actually very straightforward. It's the bearish. And on a break here to here, we can do this. All right. This is interesting. Hasn't broken out yet. This is SSE PLC. And if you look at from a bigger picture, it's lingering around the lows. And and then you have this, which is a little rectangle here as well. And this as well is something to keep a very close eye on, because from a trading perspective, you can have a 10% move on the break to the high here from June. And if you're super bullish, then you're looking at getting involved on the other side of the range and just being bullish above 11,125. So there's this scenario. Okay, so we still have a few more stocks. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 more charts that we're going to take a look at. All right, this is national grid, sorry. Ascending triangle like that. They say the safest option is to trade a breakout. I don't disagree. You get that, could potentially go upwards. If you really know this company, you like it a lot, then around these levels and just being bullish above this low is what I will look at. Because then you can have that move, and then suddenly you're looking at potentially a 20% move instead of an 11% move. At the same time, you think, oh, this company is rubbish, it's not going anywhere. Don't kid yourself. Then you're looking at that. But to trade that, it's not just enough to break the trend line. The trend line itself doesn't really matter for me too much. It's just there, and it's part of the pattern. It's the horizontal level at 873, which is the key. All right, Okado, one of the winners, right? Okado, if you don't know about it, obviously if you're based in the UK, you definitely know what Okado is. But if you're not from the UK, then this is an online supermarket. I use it myself. All right, so we have this very bullish move, and you're starting to see this pullback. Why? Because people are starting to go to the actual shop. They don't. You go to Tesco, you go to Sainsbury's, Marks and Spencer, Waitrose to buy your food. You don't necessarily have to buy stuff online because people are there's less. The virus is less prevalent. I mean, it's less virus. That's it. So you're starting to see some take profits here. You can see you have a breakout here, which should have resulted. This is a mini ascending triangle. So this is a mini ascending triangle. Up until here it was, and you had that breakout. Instead though, what happened, instead of having that 11% move, the market actually fell short of that, and then it traded decisively back into the pattern again, which is bad. In fact, it went down and then actually traded on the other side of the pattern, which is bad for business. So what's happening here is that this is moderating now. Now I wouldn't really care too much about this here because we're dealing with a very strong uptrend overall. So but what it does tell me is I think people are starting to take a bit of book profits. Let's see how this matures. I think it's probably going to come down a bit more, maybe to 1,947, and then probably is going to go back up again. But I want to wait. I want to wait until next week. We'll take a look at this again. When is the time to pull the plug out of this one? It really depends on what your thinking was. If you bought the breakout, then you probably about to hit your stop loss already now. And if you're more of a long-term investor, there's nothing wrong chipping off some profits here, because if we do take out 1858, we can trade much lower over the next few days. All right, this is an interesting one. So Cineworld, as far as I know, cinemas are not open yet, and they're not going to be allowed to open just yet. So Cineworld obviously had a massive collapse, right? But people are getting ready. The market is not going to wait until you go to the cinema. People are buying now because they think, all right, some guys will buy, some people will go to the cinema, and that's why they're going up. Because of COVID-19 releasing its grip of the economy. And then what we're looking at here, you're looking at actually a triangle to some extent. And you're looking at this little push here. But realistically, you know, if we go back to normal times, which we obviously will not, but we were trading here in January. We have this massive breakout here. So I definitely not saying we're gonna go up there, but keep an eye on that level. I think if we just take fib from the very high to the very low, then your first fib is at 138. And what can we do here? So we had this initial breakout. You have the little pullback. If we are lucky, we'll come down and we can potentially just be bullish. Let me see here, above 69.70. So if we come down a bit to 87.38, that would be great. And then hopefully from this level, we go upwards like that. This is Carnival. This is the cruiser. You can see here an amazing, beautiful breakout. Nice bottoming out pattern, ascending triangle, beautiful push to the upside. Very good, very solid. And then you're looking here at a pullback like that, okay? And you know, you're looking at this potentially doing something like that. The pattern itself is not actually that optimistic. It's looking for this. Are people gonna go back using cruises? Probably. Fib like that. This is just a 50% correction as well. It's not, if people go back and don't go back using cruises, I don't think it really matters too much. Technically, it's a bit oversold. But this is one of these companies where you need to pay attention, because as I said before, I have not looked into the nitty-gritty of this company. And you know, if they do need a bailout, or they have received a bailout, or they're going running out of cash, you need to be fully aware of that, of any warnings that they're issuing, just because there could be a situation where some of these companies do need a bailout. And if you're a shareholder, that will usually dilute the value of your holdings, because you have usually government stepping in, and they will take equity in the company, and that devalues the value of your shares. On the other hand, you won't lose your shirt because they got a bailout. So this is one of these companies that you need to take a look at. Even Cineworld as well is one of those companies where if they run out of money, you know, they will shut down some of their venues, and who knows, if they run out of all the money, then yeah, you'll be in serious trouble. All right, this is legal in general, and legal in general had a nice little rectangle pattern, and you had a breakout, and we know how to trade with rectangle patterns. So you're looking at that move here. We're almost at target. Then we'll see what happens. Overall, it's a market that's not really going anywhere. If it goes down a little bit, then probably gonna go up again. This is Tullow Oil PLC. Like, all these oil companies are like super excited about this push. I definitely see more value in some of these companies. Oh, let me see, press the wrong button. And like that, and then like that. Let's take a look at the long-term prospects of this company, or the long-term chart. So the long-term chart is actually a very different one. Well, it looks much like crude oil. So it's at 1998 lows. Going up, no question about it. Has some serious gaps here. Fib wise, you can have a correction, maybe $100. That would be a silly amount of return percentage wise. We already had the breakout. Unfortunately, it happened today. It's up with 30% today. Maybe something happened with the news. I don't really pay attention too much. I mean, it's not that I don't pay attention. I don't know exactly what happened today. I can tell you that. If we're lucky, you have a bit of a pullback tomorrow. If we're lucky, if you really want to get involved, what you could do, you can look at a 50% correction of today's candle. So this is the low from today. And then you have 50%. So there you're looking at 35.94. That could be something if not, I'm going to do it as well. Actually, I'm going to push it up like that. Then we'll look for something like that. And we're going to, unfortunately, we're going to leave the trend defining level the way it is. Actually, we push it up a tiny bit to 24.73. Okay, this is Aviva. Aviva had a bit of a bear channel that it took out like that. And bear channels, not the best of patterns, but there we go. And you're dealing with an uptrend about 244. And you have all these lows here, which are super important. It's going to be a challenging period. If it will go back maybe to 278, maybe we'll go upwards afterwards. And this is Royal Dutch Shell. And this one is actually not a great pattern, but it's obviously going up. I think maybe this was the actual breaking point. Now we're challenging that high. We need to take out this level. If we come back down a bit, we can go up. But I think there are better markets out there. This is next, the retailer. So next is up quite aggressively overall. And this as well, you had a pattern like that. And we're about to hit that target now. Trend will remain bullish above 47.22. We're having a bit of a push to the upside. It's not taking any prisoners, it's just going up. I think if you have a pullback, well, I'm not sure that's going to happen, but if you have a pullback, that might be interesting. All right, this is Rolls-Royce. Rolls-Royce is having a nice breakout today as we speak about. This, thankfully, can be interpreted like a rectangle. And we're actually just in the very beginning here. So this one as well, much like Tullow oil, you could potentially see a little pullback. Hopefully this is up with 12% today. So if we can get maybe a 50% correction or something like that on today's candle tomorrow, then that would be interesting like that. And then you will look, I would just be bullish above this level here. If you're a long-term investor, you don't care about that level. You care about the low here from 2020. And this we could potentially go up to some 500 per 484. This is Boohoo. So Boohoo is an online retailer for young women and men. If you buy clothes there, I'm not gonna judge. But yeah, you got support here. It's a solid company. I mean, they're very, very popular. I mean, ask the head of H&M. Well, he did wrong. All right, so you got a bit of an uptrend here. You know, it did reach a 2020 high. It took out that previous high. You know, people buy more stuff online. This is just the way it works. I do remember the girls at the offices would buy stuff from here sometimes. So as 304, bullish above that, pulls down to 340. That's where I would look at. This is a bearish. No, I wouldn't call it bearish. So it's slowly grinding higher and higher. From a trading perspective, it's not really that interesting. It's approaching the highs here. Okay, so it's not the time to be entering this market. It's the time to look to get out. A lot of people, you know, they're really not. I mean, it depends. You know, if you have a multi-year outlook, you know, obviously since 2011 it's going up. But even if this wouldn't be the best time to buy all in. Glencore. So this is Glencore, and you was going up and up and up, and then started to rush higher here, and we can interpret this little section like an ascending triangle, rectangle like, and you have that push here. So you're looking at something like that. A bit too late. And then finally, Taylor Wimpey. This is a real estate builder. Obviously knocked off. People all think that the housing market is going to decline. I did see actually some articles on the Financial Times, like some of these very high-end properties, where you see reduction of 8% or something like that. But this is like people, I think, that do real estate investment in the very high end. They don't necessarily live in these places. They have several apartments. I can just tell you something myself. Like, I bought a place like 2 years ago in central London. Yeah, you have COVID-19, but unless you have to sell, you wouldn't be selling. You would just hold on to it. Here, from a trading perspective, you definitely have an uptrend. There's no question about that. We're trying to take out the high. I'm not sure that's going to succeed. So I'm going to take a bit of a defensive view and look for something like this. And you know what, guys? That's the end of the list. So we covered a great deal of stocks, and we'll do the same thing next week here on Investing Cube and on the ATFX YouTube channel. Now let's see if you guys have any questions. Anthony says, good morning, Alex. Nice webinar format. Nice webinar. This is a new format. Yes, so this is the new format. So we're going to provide you guys with sort of a week ahead, the big picture, cover much more markets than we usually do. And we'll do this on Mondays, and then on Thursdays, we're going to come back and we do the short-term stuff as we usually do. So it's going to be slightly less webinars than before, but we'll give you guys more content so you can be better ready for what's happening. And then you have the new edition, which is all these stocks. I know some of you guys don't trade the stocks, but for everybody that's finding out about it now, then hopefully you like this. And we're going to take a look at stocks in general, because it provides you guys with a little bit of a different angle, different view to see what's happening in the indices as well. So if you like this one, don't forget, I've been talking here for 1 hour and 40 minutes. Awesome. Thank you so much, Kenny. Kenny says here, yeah, he likes my view. Good. Yeah, I'm very happy that I can help. We're trying to create a bit of different content for you guys, and hopefully help everybody to be better. Not be better, but to trade hopefully better. Okay, good. So don't forget to hit that like button. What I'm gonna do in the next after lunch, I'm probably gonna do a little list here, so you can quickly find what you're looking for. Like a table of contents is gonna be in the bottom here. But don't forget to like this video, and don't forget to share. And I'm gonna tweet about it. So don't forget to retweet. That would be really good and nice. Here's the link for that, for my Twitter as well. If you want to get a hold of me, you can get a hold of me there. As well, before I forget, we do actually offer some more educational stuff. So if you do like the analysis style that I do, then we do offer a course, as you might know. Let's see if I can show you the screen. So this is the link for the premium course that we offer. And you can buy it for $7.99, or you can get it for no cost with ATFX. So ATFX is the broker that I represent. And they're FCA regulated broker. They have offices in London, where I'm based, and you can pop up the office as soon as this is over. You can pop in the office, have a talk. We offer the course for free. It's a 4 hours long. It's a lot of technical analysis. It's called the Forex course, but trading technical analysis, you can apply that to almost anything. Also, we do offer, if you're based in the UK but also offshore, we do offer coaching as well. It's not for everyone, but for majority of ATFX clients have access to it. And you can speak with me, you can speak with Angeline, you got Nicholas, Crispus, or Inno as well. So you can choose. So you get 2 hours if you sign up with ATFX. And what happens is that ATFX will take care of the bill. We just offer the service, and you don't have to worry about anything. There's no cost involved. You just have to have an account with ATFX. There's no cost of opening the account. There's no cost of transferring the money. There's no cost of transferring the money out. The business model is very, very simple. When you start trading, what happens is that you pay a spread. So, for example, if you trade 10K lot in euro dollar, they would make $0.6 on that trade. And if you trade 100,000, they make more and more money. So, a lot of people to trade many times. So that's how it works out. If you take shares with them, you pay a bit of commission, and then that's how things work out. So the idea is support the client, make them profitable in the trading, and then what happens is that they make money as you trade. So that's the way you win. So it's a win-win situation. Okay, guys, we're gonna wrap things up. Thanks so much for joining me today, and catch me on Monday at 11 a.m. London time for the next market update like this one. And then on Thursday, we'll do a usual one, a shorter one from 9:30 until 10 a.m. as we usually do on this page. And best thing is actually you go to YouTube and then you subscribe to us. So what happens is that you, let's see if I can show you. Okay, I can't show you because I'm logged in. But the general idea is that when you're not logged in, there's going to be a subscription button down here and a bell button. Okay, guys, thanks so much for watching, and I'll see you guys on Thursday at 9:30. Thank you, and bye-bye. See you.